For example, we'll start with the euro dollar here. I have the 1 hour chart. And what you see is we started to have a sell-off on Friday, and that extended into Monday, August 27th session, and found support here at about 1.2465 during the Tuesday start of the Asian session. Okay, if you look at this decline here, it looks like a ABC connector ABC. So it looks like a double 3 in Elliott wave terminology. No, basically it's a large ABC correction. And now we have a pretty sharp move up. So it looks like this is a bullish continuation signal here. Okay. Now let's hang on to that scenario first. Bullish continuation. It goes with the trend that we have seen in August and like since the end of July really. Let's go to the 4 hour chart. Here we had towards the end of July we found support 1.2043 and we have held above this rising trend line since and actually accelerated further last week. Okay, it's a little bit overbought in the short term scheme of things, but actually, okay, so the reason I say it's a little bit overbought here in the 4 hour chart and as well as in the 1 hour chart is that when you look at the Bollinger Band, and in my case I have 3 standard deviations for the Bollinger Band, 3 standard deviations from 200 simple moving average. So it's a bit wider band than your conventional Bollinger Band. I like to use 3 standard deviations. I like to use the 200 moving average. So I see when the market is a bit extended away from the mean price action. Okay, and that's only relevant. That's only that meaningful if the market is sideways. When it's overbought and oversold in a sideways market, then there's a tendency or tension to pull back towards the mean price action or regress back to the mean price action, and for me that would be pretty much back towards the 200 moving average in that time frame. So in the 4 hour time frame here, it looks like we had a bit overbought here. When the RSI also went above 70 and price was tagging the upper Bollinger Band, but really it's resolved that overbought condition. And actually, the fact that it was able to push the RSI to 70, push the price to upper Bollinger Band, is really a bullish signal, outside of the immediate condition, which was overbought. So after this correction and a pretty sharp price action, really there isn't any reason to believe that we have topped off. Just based on price action and technical set condition, it looks like the market is actually in a bullish continuation. Okay, so sticking with that, and let me just add, as far as the RSI goes, and this is how I read the RSI. I read it for trending signals. Traditionally you would look at the RSI if it's above 70 or below 30. That means overextended. For me, I look at that too, but that's for the very short term, for the very immediate technical condition. As far as looking at the momentum that's building or lack of momentum, in this case it is building because you have the RSI here, pretty much kiss 70, hold above 40, kiss 70 again. And every time you have the RSI hold above 40, for the most part, you do have some brief violations here, but as long as it does hold above 40 and push back above 60 with the ability to tag 70, that shows you bullish momentum, developing, and it's still persistent since the end of July and beginning of August. So throughout the month, we continue to rally here. Think, earlier in the month, I remember talking about this anticipation of the euro, this euro strength anticipation throughout August, because it seems like September is the big month where where there's going to be some implementation of solutions, like the ESM is going to go online in September, and these things, anticipation of these things can give the market hope. So we do have that, but we have to be careful as we get closer to these events that the market has positively anticipated, because the classic buy the rumor, sell the news type of scenario is always present when you're dealing with these major headlines surrounding the euro crisis. But in any case, there is still some upside risk as we look at this bullish breakout. And I would say when you look at the daily charts, a little messy here because I usually deal with the 4-hour and 1-hour chart here in this template. But you can see the next key resistance levels here for the June high, slightly above 1.2685 and just around 1.2750. Okay, so this would be a key level to monitor if we indeed extend this rally here a little higher. Okay, and we also come up against this declining trend line, going back to February, going back to the 2012 high. Okay, so this really large area here is a area to monitor for resistance, and but for now there is still some upside towards that level, in my opinion. Okay, so that's the euro dollar. Still bullish in the short term, but in this longer and medium term, the market is bearish, right? When you look at the daily chart, and when you go back to 2011, it's been bearish since April of 2011. Okay, the market here in the daily chart has been holding below the 200 moving average. It's in a bit of a correction right now, and one thing we can do is measure all these previous corrections and take the current one as an analogy. So here, this is another one here, one of these major corrections. Okay, so the anticipation of this here as resistance 1.2750 is actually smaller, anticipating a smaller correction than we have seen in the past. Okay, so the upside is therefore not really that aggressive when you're looking at the upside towards 1.2680, 1.2750. All right, so that is sort of the medium term outlook